Hi, it's Corey Litzenberger again, coming at you from CGL Strategic Business and Tax Advisors online at CGLTax.ca. You can find us on Facebook, Twitter, Snapchat, Instagram, pretty much anywhere. LinkedIn is where you'll find myself, and I'll probably post something in more in a written fashion on there. So what I'm coming at you today with is just wanted to kind of give a little bit of a background on whether or not tax advice can be free with your double double. And I've always joked that my biggest competitor is Tim Hortons because Coffee Row is where many of the individual tax planning ideals come from. After working in tax for nearly 16 years, it's dating myself here, on both sides of the fence. Tax planning's not getting any easier, and brainstorming ideas over coffee are not getting any different. I can't count how many times clients come to me to ask about tax advice they've received from less than reputable sources. My neighbor says employment insurance benefits are not taxable. They are. My friend told me I can deduct all of my vehicle expenses if I set up a home-based business. Yeah, no. How can the CRA reassess me if there's no paper trail? Net worth audit. I was told there was no GST on used vehicles. GST registrants have to charge GST on anything they sell, even used items. My buddy got more money back this year. Why didn't you do that for me? Each person has different circumstances. Each person has different deductions. Each person has different credits. He might even just have extra money taken off each paycheck that you don't. And so all extra refund is that interest-free loan to the government. So it was your money to begin with. You gave it to them more than you should have, and you got more back. So I mean, it's just the timing tax issue. Has nothing to do with the actual refunds. I've heard that paying taxes is voluntary. Don't pay them and find out how voluntary it really is. That's really what can come down to that. So when you're seeking out financial answers related to your tax matters, be wary of the source. I mean, be wary of me for that matter. But for those of you who have watched a few of these, and for those of you who have read on our website and seen our reviews and have even dealt with us as a client, you know that I probably have a pretty good reputation as far as where these things are coming from. However, watch out if for those of you who haven't used me or haven't used us or are outside the realm of wanting to deal with somebody out of Red Deer, even though we have clients all over Canada. One of the things, or some of the things I'd like you to watch for is there's some red flags. And so one of the things to keep in mind is, does the advice sound too good to be true? This kind of advice usually involves things like tax-free income or being able to deduct lots of personal expenses. Quite simply, in Canada, all income is taxable unless the law says it isn't. For example, garage sales are income, but before you quote me, just know that there are exclusionary provisions dealing with personal use property under Section 46 in the Income Tax Act. Basically, if you sell it for less than what you paid for it and it was personal, you're not going to have any issues. If you sell it for more than what you paid for it and it was personal, there's no issues unless it's worth more than $1,000. So if you bought something for $500, sell it for $800, who cares? If you bought something for $1,000 and you sell it for $2,000, we've got a problem, even if you used it personally. Now, obviously, there's a difference between the buy and sell for under $1,000 for some personal use items and flipping. Flipping becomes a business activity. You're doing a lot of volume of transactions. That's a whole other story. But basically, just remember that if they're telling you that there's tax-free income, chances are that there's a but somewhere. Personal expenses are not deductible. That's 18(1)(h). It's very, very simple provision. But there are some common exemptions that everybody knows about. Tuition costs, medical expenses, charitable contributions. They all have their own schedules and calculations to allow those types of personal expenditures to be used on your taxes. Other expenses for your personal house, such as mortgage interest or property taxes or your vehicle, are deductible if they are used for business activities, or in the case of mortgage interest, sometimes if you've used that money when you borrowed to buy something else, like an investment that pays you dividends or something to that effect. But if a friend tells you that he writes off all his home or all of his vehicle, he's either full of it or he's telling you that he's committed tax fraud. And last time I checked, fraud and tax evasion are both criminal charges. So I don't know if that's my best advice or best source of advice that I've listened to. Another thing would be, does the advice lack context? I mean, I've said that some of the income can be non-taxable, but may be taxable under certain circumstances. So, things like life insurance proceeds, scholarships, gifts, inheritance, support payments, benefits for damages for physical injury, sickness. These are all types of income that may not be taxable. However, there are some situations that could create adverse tax consequences to the recipient or to the payer or gift giver. When in doubt, contact me or someone like me. So when you read the Income Tax Act, I call it the original edition of 50 Shades of Grey. When you read the act, you'll see a lot of words like notwithstanding, except, deemed, ordinarily, all or substantially all, to the extent that, etc. So I mean, there's a lot of different phrases that kind of put things into context. They're not all inclusive. So it's not as black and white as some may take it and some preparers may file it. There are exceptions, exceptions to those exceptions, and exceptions to the exceptions of the exceptions. You get the point. I always say that do what do tax answers and people with bowel issues, knowing how we sponsor colitis and Crohn's and Colitis Foundation. I've always said, what do tax answers and people with bowel issues have in common? And that depends. Feel free to laugh now. That's the best of the tax jokes get. Be wary of any advice that does not take your unique situation into account. You have difficulty understanding it. That might be another flag to keep in mind. The Income Tax Act and regulations are complicated, yes. A good tax accountant should be able to explain any basic rules, deductions, and credits that apply to your return in layman's terms. If they can't explain the provisions that they are applying, do they really know them? Remember, you are responsible for everything on your return, whether or not you've paid someone else to prepare it for you. The courts have ruled time and time again that saying, well, someone else did it, my taxes, is not a good enough argument. If you don't understand something, ask. If you're getting a much larger return or owe more money than expected, find out why. Perhaps there's, we are human. We can make mistakes. Perhaps there was an error on the return. Maybe we need to fix it. Things can happen. That's not a problem. So if there is something like that you owe more than you expected or don't understand what's going on, but find out why. I'm not adverse to telling people why they have it. They may not agree with me. They may not like it. The chances are they're more mad at the government, but I'm the one that's standing in front of them. So that's who they're going to take it out on. Also be aware that there might be a conflict of interest. So look out for tax advice from people who are seeking to receive a commission or a kickback. Take me, for example. In addition to being a chartered professional accountant, or CPA, I also have my Certified Financial Planner, CFP, designation. So many CFPs are paid commissions or residual fees to sell investments, insurance, and earn commission on those sales. Now, although I don't sell any of those things, it does not mean there couldn't be a conflict of interest if I did. All conflicts of interest should be disclosed by those that have a professional code of conduct, like the CPA or the CFP members. We follow a code of conduct that require us to disclose these types of conflicts of interest. So don't be afraid to ask, how will you benefit from this, if you suspect the advice is not necessarily in your best interest, or if you suspect that the person giving the advice might get a commission or a referral fee or some other reward for the advice or referral. I am more than happy to tell you how I am paid, how my remuneration works. We don't take any type of referral fee from those that may offer it to us for this very reason. We publish our prices. We list the full disclosures. I mean, there's times where I've had to, and some clients who might be watching this might agree, where I basically had to say that because you're a family unit, they're both my clients. And so if you're looking at me to give you a planning advice, I have to make sure that I'm taking their situation into consideration and disclose if I'm dealing with a father-son situation where the son is my client and the father's asking for advice, saying, well, what should I do? Full disclosure, your son's my client. So if I give you some information on how to benefit you, I'm probably also considering how to benefit him. And so, keep that in mind. Now, obviously, I'm going to try and make it work for everybody, but I will still disclose it. And that's the key, are they disclosing those conflicts of interest? If you think there might be a conflict or think there might be something else going on and they're shying away from the question, what are they hiding from? Most CFPs I know, most CPAs that I know will disclose. Probably, I would say, all the good ones that are reputable will disclose if they are getting any type of commission or kickback or fee for providing the advice or the referral. And if they're not disclosing that, then I would seek alternative advice. If the advice suggests that taxes are voluntary, now I've kind of already said this, but no matter how many times these arguments get shot down in court about Magna Carta and stuff like that, people continue to claim that the payment of federal income tax is voluntary. This claim is based in part on the fact that the CRA itself describes the way we file and pay federal taxes as a voluntary compliance on a self-assessment system. As you know, I'm sure it's on Snopes somewhere that they check everything else, but common sense dictates that if paying income tax were really voluntary, that little tidbit of information wouldn't be known to a small group of tax protesters, while millions of others of us, including myself, would fork over considerable amounts of money that we weren't obligated to pay. Why would I do that if I didn't have to? Many tax court cases have shown that neither the obligation to file the tax return nor the payment of income tax is voluntary. So file your return, pay what is owed, otherwise you'll soon find out just how voluntary it might actually be. If the advice is referred to as a tax shelter, or if they have a tax shelter identification number, I would also caution you there. There are a few legitimate tax shelters, such as those related to oil and gas explorations and sometimes some real estate development, flow-through shares, that type of thing. However, many other tax shelters are at least bad deals from a business standpoint. They're losing money on purpose because they're exploring, they're developing, so they're not going to generate a profit. So the theory is that you are losing money, we'll let you have the expense incurred as a deduction, and then eventually when it finds something, it's going to have either income or it's going to have a huge capital gain when it finds a deposit, a mineral deposit that it sells. And so then you'll recognize that as a capital gain type of situation. So those types of properties are there to promote development in those types of things. But there are many, it's still not a good business deal from a current standpoint. I mean, you're losing money. I mean, no one wants to lose money on purpose. So if it's an otherwise normal type of business, you can question yourself as to why a business deal would need to be structured as a tax shelter if it's going to be profitable. It doesn't usually sound like a good business deal. So, you know, most businesses will show profit before we deal with any tax considerations. There are also tax shelters that promise you'll receive huge charitable donation slips, sometimes for greater than the amount you actually contribute, actually most times, or some other similar too good to be true scenario. The CRA are constantly investigating these tax shelters, and they're taking them to court, and are successfully getting these things won in court. And so if you get caught avoiding income taxes by illegal means, you have to pay back those taxes plus interests plus some penalties in some cases. I've spoken about these risks at length in another video on our website. I think it might even have been the very first one that I did. Please just watch that one as well if you have more concerns about these types of schemes. Now, another thing you got to watch, or another flag to be aware of, is if someone promises you a big refund before they look at your info. Every year during tax season, I hear commercials, ads, billboards that promise huge refunds, you know, and they begin to flood in. No accountant can get your refund faster or bigger than anyone else. You are entitled to the same refund whether you prepare the return yourself or hire a professional like myself. Anyone promising they'll get you the biggest refund may be padding your return with credits you're not actually entitled to. Don't fall for the hype, especially if they give you a refund on a prepaid bank or credit card that you now get to pay a service fee for every time you use it. When the government comes along to reassess you that tax, you have to pay that tax back plus the interest plus the penalties. You are also now out of pocket those service fees that you paid for the benefit of having that prepaid card. So remember, you're responsible, plain and simple, for that type of thing. So be cautious on the motives on that refund. Is it just putting down deductions and credits for the sake of getting you a bigger check? That doesn't mean it's going to work necessarily in your favor over the long term. And lastly, if you receive really no advice at all, and you commonly prepare your own tax return, or you run into a new situation, and you may need help. So even if you file your own, And sometimes you may end up into a new situation. There's major life changes, selling real estate, buying your first house, starting a new business, adopting a child, having children go to university. All these things can change your tax filings. Don't be afraid to seek out the advice of a professional. Even if you want to prepare your own return, most of us, although maybe March and April might not be the best opportune time, but most of us will be willing to sit down with you during the off season and answer these types of questions, offer advice on your situation. In our case, we don't charge usually for an initial consult under the proviso that, anything we're saying in that initial meeting usually isn't too technical. It's generally, FYI type of information. And it's more of a meet and greet session to see if we can help you on a further basis long term. The hourly rate that we would charge for longer or more technical things are probably well worth the fee, or at least I would think that I would be worth my fee for you to avoid an audit resulting in a penalty for filing incorrect returns or interest or additional taxes because of doing things incorrectly. So my fees should be cheaper than the government problem you may open up. No one pays me, let's be very clear, no one is paying me to fill out a piece of paper. They're paying me for the advice or for the things that I might be able to discover or the planning that can be done in the coming year. The paperwork's actually the easy part. So if you're unsure, seek that advice from a certified, experienced, chartered professional accountant by trade. Look for those credentials. Look for a CPA. CPAs are well trained. They have a code of ethics that are required to maintain up-to-date knowledge, even averaging 40 hours per year in professional development. They have to have 120 hours every 3 years, and so that's at 40 hours a year. That's an entire full-time week devoted just to learning, to maintain their education. Myself, I think I've been averaging in the neighborhood of around 60 over the last few years, just because I'm a tax nerd and I attend a lot of conferences and sessions. So getting professional advice is more expensive than getting advice from your coffee buddy. Yes, but think of it as an insurance policy in a way, and that you pay the premium today to avoid the very expensive disaster tomorrow. For CGL Strategic Business and Tax Advisors, online at CGLTax.ca, I'm Corey Litzenberger, and we hope to see you and have a safe tax season. By don't drive intoxicated, and you've heard all the bad puns. And thanks for watching this. Share it with your friends, like it, do everything we can, and get this out there. And we'll see if we can come up with another good one for you later this year.